The number of people that I have talked to, friends, family, clients, who have said, should I buy that? Yeah, we need to talk about this subject.
Well, and the quick answer is you can't.
Right.
At least at the IPO price.
Not at the IPO price, right.
And really that was going to be kind of the topic for today is what all goes into an IPO and why is it that the average retail investor does not get access to something like that. Hello, and thanks for joining us again for another edition of the Retirement Planning Happy Hour. Eric Douglas, Chris Vaughn, Family Wealth Planning based out of Louisville, Kentucky. Thank you so much for joining us. We have a pretty interesting episode, I think. We don't typically try to say too terribly topical
We're about
on
as
the
topical
podcast.
as we can be today.
Yeah, but we're going to be fairly topical today because today, as we record this, now not the day that you're listening to it, but the day that we are recording this is the day of the SpaceX IPO.
In fact, it's only about 2.5 hours ago that it actually went live.
So we actually have a tiny bit of history to actually
very
talk
small.
about, a tiny bit of data in regards to what the price has been doing since the original IPO, or the IPO this morning, as of a few hours ago. But we figured we would kind of go through the mechanics of purchasing shares in an IPO and what that looks like, because obviously with SpaceX being the most
definitely the most hyped up.
That there's been more interest. The highest interest IPO that I can remember in my lifetime. The only one that I can think of that came close was probably Facebook.
Facebook was very hyped. Alibaba was really hyped.
That was another one, but that's
12, 13 years ago.
But not as much here because that was overseas.
Right.
And I know there's a couple more. OpenAI is supposed to be coming to the...
Yeah, that's coming.
It's coming later this year, but I mean the amount of interest in the SpaceX IPO because it's Elon Musk and because of the valuation and just everything around it, it's been just so hyped up.
Yeah,
and we're getting calls that we never get from clients asking to purchase or invest in an IPO. And
the number of people that I have talked to, friends, family, clients, who have said, "Should I buy that?" Yeah, we need to talk about this subject.
Well, and the quick answer is you can't.
Right.
At least at the IPO price.
Not at the IPO price, right.
And really that was going to be kind of the topic for today is what all goes into an IPO and why is it that the average retail investor does not get access to something like that, or at least not to the open IPO price. Now, as we're sitting here today, in the afternoon, of the IPO day, right? Yeah, the average retail trader can come in and buy it now.
Yep.
But now it's just like buying any other stock. You can't get it at the IPO price unless, of course, it dips down below that IPO price.
Which, you know what? You were talking about how Facebook was one of the big famous IPOs that came out. Well, that one did exactly that. It dipped well below the IPO price, and people bought it.
Yeah.
And then it went up. So is that going to happen now? Who knows?
But we'll talk a little bit about the mechanics of what an IPO looks like from a retail trader's perspective and the process that it goes through to kind of get to market. Right. We figured that might be of interest to some of our listeners today. I know it was of interest to some of our clients as we kind of walk through that process with them. But along with that, we have what I'm hoping is going to be a delicious pour. It's definitely new to me, so I'll let you walk through what we have today to drink.
Okay, so we're back on the Blanton's train. Blanton's advertises themselves. I don't know whether this is 100% accurate or not, but they do advertise themselves as the original single barrel bourbon. Okay. Well, we've done the regular Blanton's, I love regular Blanton's. It's really, really good. It's also arguably the most overhyped bourbon maybe in the world, which I thought would be very appropriate to talk about that since we're talking about the SpaceX IPO.
To be clear, not bad.
No, it's really good.
It's very much overhyped.
Is it worth what it was selling for just a couple of years ago when it was going to cost you a couple $100 to get it? No, not even approaching it, right? Yeah. And we've also done Blanton's Gold before, that's like the best of the best. This is Blanton's straight from the barrel. Now, this is a different animal altogether because unlike those two that we just mentioned, where they take it out of the barrel and then they cut it down to 93 and I believe it's 103 proof respectively, this one doesn't get cut. It is straight from the barrel, right? Most companies would call this barrel strength or something along those lines. It's a marketing thing. Straight from the barrel is what they call it because it's different. It's not filtered. It's not cut. It's not uncommon when you see one of these to find some char for the barrel in the bottom. There's not any in this one that I can see.
There's some, I was going to say
okay,
there is.
Never mind. You've got some in your glass. Okay. Yeah. There wasn't when I looked, but that was after I poured your glass. So not uncommon for that to happen. This particular one, now Blanton's, they like to hand label their stuff. This one was dumped, meaning taken out of the barrel, in August of 2022. So this is almost 4 years in the bottle as we are having this conversation. They'll put down the barrel that it was from. In fact, they even put down the bottle from that barrel. This was bottle 28 out of that barrel. It doesn't matter, right? But it's kind of cool. Yeah. But the big thing is because every barrel comes out at a different proof and they're not blending, they're not cutting. This is 128.2 proof. So we are way up there on the heat scale, if you will. It's interesting. You haven't tried this yet. You've never had this one before.
I just tasted it.
The comment that you made before we started recording was, well, it doesn't smell that hot. So we're going to find out here in a minute whether you think it is. I've had this many times. For those of you who don't know, most of the Blantons come in these neat little bags. This one's like a faux leather. It might even be real, just at a lower grade. Super neat presentation. It does still have the neat little letters on the horse on the top, so you can form out the word Blanton's. This one's the letter A.
I was going to say I didn't even see what the letter was. Yeah.
So if you don't know this, if you look on the cap for a bottle of Blanton's, if you're looking at it from the correct side, in the lower left-hand corner is the letter, right? And the letter will tell you, if you get them all, it spells out Blanton's. And it's got the horse running basically stop motion animation if you were to look at them all next to each other from the beginning of the race all the way to winning the race at the end. So that's what we're drinking today. We'll come back to what you're thinking right now that you've tasted it. And let's talk about SpaceX and IPOs. Because have we not heard this in the financial news world? Have we not had a day in the last month where we've heard about this?
Well, it's interesting because there's always different levels of how I know something is kind of hitting the general market.
Right.
And it's one thing if I'm hearing about it or reading about it and the things that we read about, the industry publications, the podcasts that I listen to that are kind of investment related, right? It's one thing if that world is talking about a topic. That doesn't necessarily mean it's filtering through to the retail investor, right, to the individual investors that we work with, kind of, John and Jane Smith on Main Street. Are they hearing the same things? Are they reading the same things with any of the same level of interest that I might have in any of these investment-related topics? When we start getting calls from 80-year-old clients asking if they can get in on the SpaceX IPO, something's happening,
yes,
right?
Clearly, yeah.
And I'm not exaggerating. We've had more than a few 80-year-old plus clients asking to get involved in this. What can I do to get in on the SpaceX IPO? Other clients, not just 80-year-olds, younger clients obviously as well. But we've had a number of clients that have never once ever asked me to get involved in any specific stock ever. And we start to get that level of saturation in the retail marketplace. I think it obviously is something we probably need to talk about because we've had to have this conversation a lot over the last couple months. As interest in the SpaceX IPO has continued to get bigger and bigger.
And as we've gotten closer to it, it's more and more questions are coming up about it.
But whenever anyone asks, "Hey, can I get in on the SpaceX IPO?" Whenever I answer and say, "Well, no, you can't," they get very befuddled, right? They get very confused.
Why not?
Why can't we? Everyone's talking about this in the news, and it's a big thing. Why can't I get in on the IPO?
Why can't I buy it? That's not fair. I've heard that one this week.
Yeah, it's not. You're right. It's not fair, but it is what it is, and this is the way the markets are worked out. And but when you kind of go through the process, maybe that's a little bit of an understanding why you're not able to get in as a retail investor, at least at the original IPO price.
So before we start going into the mechanics of why you can't buy it at the IPO price and then the discussion of should you buy something like this, I want to kind of go back and talk about why is there an excitement about these kind of things anyway. excuse me, if you think, how many stories have we heard about people who bought a stock when it was new, when it was opening? Think about people who bought Amazon when it first came out, and they're still holding it. Or we could go on with a list of other ones. We'd already mentioned Facebook and things like that. Things that were only a few dollars a share, right? And now they're hundreds or even thousands of dollars per share. And we hear, along with that, we hear the stories of the secretary that worked for the company and she only bought a handful of shares and now she's a multimillionaire. And who doesn't want that? It's the same story of going, well, of course I'd like to win the Powerball, right? Think about what life would be like if I were in those shoes. I think that's the kind of mindset that drives why people are interested in IPOs.
Well, getting in, it's almost like getting in on the ground floor.
Yes.
Like you missed this other opportunity. You missed the opportunity to invest in Amazon at the IPO and Apple and whatever company that you want to think of, right? But what, when you hear these stories in retrospect, you're looking in the rearview mirror. And of course, it always sounds great in retrospect. Hindsight's always 20/20. Trust me, if you bought Amazon at the IPO, you would not still be holding it today.
Absolutely not.
The number of 50%, 90% drawdowns that Amazon went through to get to where it is as a company today, you would not have continued to hold that investment.
Right.
Apple, same thing. And there are stories for days around, how Apple was about to go bankrupt when Steve Jobs came back. He had left the company. He came back. And when he came back, that was when they started the turnaround. But that still took a while to become the Apple that we all know and love today, right?
Right.
Maybe you don't love him, but at least you know him, right?
I'm a fan, I admit that. But yeah, everybody's familiar with it. As you were saying that, I thought of another reason why people like to get in on this. Apple specifically popped into my mind because pop culture, movies, things like that teach us that we can buy at the beginning. And the one that popped into my head, remember Forrest Gump? When Forrest gets the letter that Lieutenant Dan had spent some of their money and he bought this startup company that was like a fruit company or something like that.
Yeah.
And now, he gets the letter and it's got the old Apple logo on. Now I don't have to worry about money no more, right? I think there's this belief that because we see it in the movies, everybody can do that, right? You just have to know which one it is. And that's kind of the point. That's what drives this
romanticism.
Yes, romance. Great word.
Romanticism.
Romanticism about buying these stocks when they're new. So let's talk about the mechanics of, the question came up. We even discussed it this past Monday in our partner meeting. The question, can I buy, or I'm sorry, it was, should I buy SpaceX stock? And we all immediately started laughing and we said, no, it's can you buy SpaceX stock? And the immediate answer was, no, you can't. Now, full disclosure, what we're referring to there is at the IPO price. Okay. We're 2.5 hours into this. I personally have already purchased some, right? I most certainly did not get it at that $135 price. I had to pay more than that. I didn't buy a whole lot of it. We'll talk about that here in a minute. So, we did a little research on how this actually works, and one of our business partners really went down the rabbit hole on exactly how this works. Just to clarify, so it starts off with an investment banker. So who was it that did this particular one? Was it
Goldman Sachs?
Goldman? Okay.
And then Morgan Stanley was also involved as well.
Okay. So what these companies do is it's their job to go out and find the initial buyers. It's very important that all of the stock, all the shares that are being offered get sold. Nobody wants to get caught holding the bag, right? You don't want to offer, say, 10 million shares of a stock and you can't sell 1 million of them, because if you do, the value of that stock's going to plummet pretty quick, right? And that kind of defeats the point.
And that investment bank is the one holding the bag.
Correct. That's exactly right. So if you're an investment bank and you've got these, however many millions of shares that you've got to sell, and it's very important that you sell 100% of them, who are you going to first? You're not going to Eric and Chris and going, hey, do you want to go buy 5 shares of my stock? who you're going to first is your institutional level investors, companies that are going to buy hundreds, millions of shares in many cases. For whatever reason. So the institutional investors, when we say that, what are we talking about? Hedge funds, foundations, endowments. So, when you talk about endowments, one that popped into my head we were talking about yesterday was Harvard. How big is that endowment now?
Billions.
Yeah, and I mean, it's
Billions.
tens of billions of dollars. Well, they have the capital to go out and say, yes, we'll buy some of that. Then you've got the big brokers, right? The Vanguards and the Fidelities and the Charles Schwabs of the world. When you go buy an individual stock, you're not going out onto the New York Stock Exchange and having somebody trade for your share. You're buying it from that holding house, that custodian. You're buying it directly from what they've already purchased with the intention of selling it. That's how they do it, right? So the initial sale price, that IPO price, you as a retail investor can't just go out and buy that, because that's being sold to the big boys who are buying in massive quantities, right?
One of the analogies, so I forgot how long ago we did an episode around private placements and private alternative investments, in the way that they're sold, and we were talking about whether or not they should go into like a 401k plan and make them open to average retail investors. Right. And I was very much on the side that no, they shouldn't.
Yeah.
Because by the time that any of those alternative types of investments or those private placement investments get to the average retail investor, the number of people that had to say no to that investment before it gets to, John and Jane Smith on Main Street, it probably tells me that that's not going to be the best investment for them, right? The people with the most money, whether it's fair or not, people with the most money get the most access to things. Money gets you access. Money gets you priority. It is what it is. We can like it. We can hate it. You can say it's fair. You can say it's not. It is what it is.
The people who pay for the express pass go to the front of the line at Disney World, right? Money gives you access.
Yeah, a lot of people might understand that analogy. Right. Absolutely, and I've never felt like more of a king at a water park. Actually, it was one of the water parks in Orlando. The first time I ever got a fast pass was at this water park in Orlando, and me and my son and daughter are, walking up the steps past a bunch of other people, and I'm simultaneously feeling, oh, this is cool, and oh man, I feel bad that I'm passing all these people.
Because you think everybody's staring at you right now.
But
it's kind of the same situation, though.
Yeah, it's very. I mean, obviously, it's a dumbed down version, but yes, it's the same situation. People with the most money get the most access up front. So the endowments, the foundations, the institutions. Notice I'm not saying individuals.
Right.
I'm not saying individuals. I'm saying institutional investments, hedge funds, people that manage billions and billions of dollars in a single fund, right? They are going to get the most access. So basically, Goldman Sachs is one of the, is the main underwriter for this offering, for this IPO. So Goldman Sachs, what they're doing is they're going to basically their biggest clients. They're going to the Harvard endowment, the Yale endowment. They're going to the hedge funds that they work with on Wall Street, the biggest institutional investors in the world, the people that own places out in the Hamptons, right? Those are the people that they're going to, and they're saying, hey, what's your level of interest in this SpaceX IPO?
Exactly. Yeah.
And this is not unique to SpaceX, by the way. We're just using this as the example. They do this for every single IPO.
Every single IPO gets this treatment.
You just don't hear about 99.9% of all IPOs because you just don't care.
You've never heard of the company in most cases,
because Elon Musk is not the CEO, and Elon Musk is not all over Twitter and X, and he's just very, very
we are talking about one of the most famous people on the planet right now. It's going to get attention because he's the one that's
and it's also a very cool company doing very cool things, and it's very, very innovative and ahead of the curve in so many ways. Starlink and internet access, and they're sending rockets up and satellites, and it's a very, very cool company, right? Most IPOs are for companies that are far less cool.
Yeah, they're making a widget that you've never heard of and probably will never buy. You don't care.
And SpaceX has been in the public eye for years already, and so now that it's an opportunity to invest in the next Tesla, right? And most people, let's be real, most people are not investing in SpaceX; they're investing in Elon Musk.
Yes, I would agree with that.
Because I don't know of another CEO that has the track record that he has between, PayPal and Tesla and all the other things that he's been involved in, right? So it is what it is. But the Goldman Sachs and the Citigroups and the Morgan Stanleys and these big investment bankers are going to their biggest institutional clients, and they're basically starting at the top,
right?
And they're saying, how much do you want?
Yeah.
And then whatever's left, they're going to number 2 and number 3 and number 4. And so by the time it gets down to, actually it's not even getting down to
it doesn't get down
the
to
average retail investor.
Right.
The average retail investor does not really have an opportunity to invest in this IPO, at least at any significant
at that
way.
IPO price.
So I will say in full disclosure, so we did check with Charles Schwab. Because Charles Schwab is who we custody the vast majority of our assets with as a firm. And Charles Schwab was involved in this as well.
Yep.
And what Charles Schwab was doing was they were making calls of interest to their biggest institutional clients. We've had a pretty good amount of growth in our company. We are nowhere near the level of the people that we were talking about, right? So it's fun to dream maybe one day, but that's just not where we're at currently, right? So, but Charles Schwab was making calls of interest to their biggest clients, and they were seeing, okay, because what Charles Schwab was doing was they were able to go buy X number of shares, but they needed to figure out how many shares that they wanted to buy, because Charles Schwab then needed to turn around and make sure that they had a market big enough to purchase the shares on their custodial platform.
Correct. For the same reason we talked about a minute ago. If they buy, say, 2 million shares, if they can only sell 1.5 million of those, they are stuck with that holding. And if it's not desirable enough to sell all what they've got, they're going to be stuck with, quite frankly, a dog. So that's why.
And Schwab's share price goes down.
Exactly. And they're not in business to lose money. That's not their goal. So that's the reason they do that.
And because of the amount of interest that was included on this IPO, we found out basically the number of shares that were going to be available to the people that were able to get through Schwab their hands on an IPO price SpaceX share. Do you remember what the number was?
No, I do not.
The number of shares on average of the people that indicated an interest in purchasing in the IPO for SpaceX.
Now. Yeah. Okay.
You were able to get a vast total of between 0 and 1 share. Okay.
Right.
0 and 1 share of all the people that were that got that indication, that call of interest, right, from Schwab. Of all the people that indicated, yes, I am interested, I would want to go ahead and raise my hand and be involved in the IPO, you were able to get your hands on between 0 and 1 share at the IPO price. That is how much interest there was in this IPO. Right. So the average retail investor just is not able to participate.
Yeah. Now, it's all sold before it gets to you. And that's really the whole point when we talk about, can I get in on this? No, you can't. Not as an individual, not as what we call a retail investor. It's all gone before it gets to you because, and you might say, well, that's not fair. Okay. So let's go back to what you're talking about, where the investment banker has to get out and get all these shares sold. And then the companies and the institutional money that they're selling it to, they've got to turn around and resell it. So give you an example of, if you've got to sell 10 million shares of something, right? I can go out and make 10 million phone calls and try to get everybody on that, that I get a hold of to buy a share. Or I can call 5 companies that are willing to buy 2 million shares, and my job is done a whole lot quicker, but I get paid the same amount of money. So what do you think they're going to do? Right? And if you think about it in that context, that's why the small individual can't get in on it up front, because you just simply aren't big enough.
And most IPOs are not like this. Once again, most of the time, these investment bankers are having to work the phones because they're allocated a certain number of shares that they have to get sold. And so they are truly working the phones and trying to dump these shares off and get them sold. Maybe dump is not the right word, but they're trying to get these shares sold off pre-IPO. So these investment banks are not the ones holding the bag.
And I think in this particular case, because of all the attention that this got, and Elon Musk, I think you're right, that's the big driver, right? But because of all the attention that it's gotten, I think it's fairly safe to say that they did not have to work nearly as hard to sell whatever the total amount that went out there. I think it was $1.7 trillion worth of shares or something like that. I may have those numbers totally wrong. They didn't work nearly as hard on this one as they do on.
No, that was the valuation.
Was that the valuation?
They were selling about 75. They were raising about $75 billion in equity for SpaceX.
Yes,
so basically they had $75 billion worth of shares that they were trying to sell at a 1.7, 1.8 trillion dollar valuation.
Yeah. Okay. So, but the point is, they didn't work nearly as hard on this one because everybody wanted in on it, and everybody wanted in on it big. Now, the question that we all have now is,
was it worth it?
Was it going to be a good investment?
And maybe it will be, maybe it won't be. I think most people probably say long term it probably will be.
Me personally, would I be willing to bet that this is going to be a good investment long term? Absolutely. As I said, I did buy a little bit. I didn't sell the farm and put everything in on this because I'm not willing to take that kind of risk, right? I have no idea what this is going to do long term. And that's the point.
Yeah. Now the people that price these IPOs, they make a lot of money to price these IPOs
correctly,
relatively close to what they should be valued at, right? So just to kind of add a little bit of context, because we're a couple hours into this thing so far.
Where are we right now? We were at 178 when I walked in here.
173.6.
So it's gone down $5 per share since we walked in here to start.
But it's up 38.
Right.
So it's up about 28% as of today, as of right now, this second. Now it's been living between since, over the last hour or so since I first started checking, it's been living between being up about 24 and 28%. So that's kind of right now, as of, the last hour, that's where the price has been fluctuating. Right. So it's kind of found a leveling off spot so far today.
So that actually brings up a really interesting point. Let's go back to these big institutional money managers, right? And endowments and things like that. Why would they want to buy tens of millions or billions possibly of dollars worth of a brand new stock, right? Why would they be willing to put so much into this new issue? And the reason for that is, if it's got this much hype and I can buy in at $135 and it jumps up to $170 within a couple hours, who do you think's selling?
A lot of people are going to be selling this afternoon.
And you think, well, no, you could sit on that for a couple of years and it might be worth a lot more.
It might be.
Well, maybe it will be, maybe it won't. But I know this, when you buy 1 million shares of something at $135 and you turn around an hour later and you sell that 1 million shares for $155,
25% profit in one afternoon.
Right.
You take it.
And exactly. And we're talking about tens of millions of dollars here that can be made in a very brief period of time. That's why these big institutional funds are willing to sink so much money into it in the first place. That's why they're willing to buy so much of it, because they know they're going to make a boatload of money in an extremely short window.
So you're going to see a lot of volatility throughout the entire afternoon. You'll probably see a lot of volatility in the last 30 minutes of the trading day, because when you start looking at what happens in the last half hour of the trading day is when you start to see all the ETFs and the mutual funds. That's when they make their trades. And so now, because so much of our investment world is based on algorithms and computer models and quant models, and so think about all the S&P 500 funds and all the, specifically, let's say, NASDAQ 100 funds, because the SpaceX is issued on the NASDAQ stock exchange. So if you own, for example, Triple Q, one of the most popular ETFs out there, QQQ. It's the Invesco NASDAQ 100.
It's the NASDAQ 100.
It's the NASDAQ 100 fund, basically. Yeah. Well, the Triple Q is going to have to go in. Whether they want to or not, Correct. It doesn't matter, because it's an algorithm. Okay? And so they have to go in and buy X number of SpaceX shares to include that company, that stock, within its ETF.
Right.
That usually happens within the last half hour of the day.
Now, if I remember correctly, and please don't quote me on this, I believe the rule is, so the NASDAQ 100 is the top 100 companies as far as size goes in the NASDAQ that are not financial companies. So it's extremely tech heavy. I believe that you have to be on the market and in that position for 15 days before you're officially part of it. So that becomes another interesting question. At what point in time do the Invesco Triple Qs of the world have to make this purchase? So that's going to create that much more volatility. How many people out there, and I'm talking about, mutual funds and ETFs, are going to have to sell some of their holdings that they have now in order to create the space this will take up. And to your point, they have to, because their prospectus, their set of rules mandates, this is what you have to have, right? So how many really, really good companies, stocks are out there that are going to go down over the next few hours, few weeks, because they have to make room for this new major player that comes in all of a sudden.
Yeah. And SpaceX is valued at a whatever trillion dollar valuation. That puts it in the S&P 500. So at the end of today, you're going to see all of the S&P 500 index funds, and how many of those exist within every single 401k platform, within every single 403b platform, within just within the universe.
I don't know of one of those platforms that doesn't have that.
So
it's a standard.
So it's going to be interesting because you have this new player in all of these funds. By definition, have to include the 500 biggest, stocks. Whether they want to or not, that's just by their prospectus, they are going to be legally mandated to purchase SpaceX. So that's going to cause even more fluctuation because, once again, to your point, they're going to go in and buy SpaceX, but then they have to sell something else.
Right.
This doesn't happen in a vacuum, right? It's not like there's just this unlimited pool of money that people are just going to go buy SpaceX with. You typically have to sell something in order to buy something else. In order for there to be a buyer, there has to be a seller, right? And so there's going to be some wild fluctuations with this at the end of today and then on Monday. On Monday, I think you're going to see a lot of profit taking because once again, you're going to see probably the last half hour of today. You're going to see a lot of these, ETFs and funds coming in and buying shares of SpaceX. And then Monday, you'll probably see a lot of profit taking.
Now, when we talk about profit taking, I think this is where the average Joe out there says, wait a minute. I paid $170 for it, and now it's selling for $180, right? I don't want to sell that. I'm only going to make $10, and I got to pay capital gains on that $10. I don't want to do that. I'm more of a buy and hold guy. When we talk about the profit taking, remember, we're talking about mutual fund managers, institutional managers who are selling tens of thousands of shares. So that $10 difference in that example that I just gave, it can be huge sums of money. That's why they would be willing to turn right around and sell it. And when people that hold that much sell that much of it that quickly, what happens? Price starts dropping.
A lot of price variance.
Right? Yep. So, and that's where you get that volatility. And by the way, when they're selling out of that, they're buying something else, right? So that's where you get the craziness that is an IPO sometimes.
So all that to say, that's kind of logistically speaking what happens with an IPO and what's happening with SpaceX right now and will continue to happen over the next couple of days. Who knows what will happen with the price? Maybe it doesn't go back below that IPO price. Maybe it does.
Right.
There's a very real chance that it will. I don't know. Maybe it will, maybe it won't. So I think this leads to a greater discussion of, once again, we talked about what were our clients calling in.
Yeah.
Hey, can I buy this? Well, by the end of today, the chances are pretty good that you probably will own it.
Right.
You're going to own it within the context of an ETF, within the context of a mutual fund, within your 401k, right? You're probably going to own a very, very small sliver, but you're probably going to own SpaceX within one of your funds within your portfolio if you're investing in index funds in any way, shape, or form.
Correct. And same would be true with mutual funds where they're supposed to be holding that. So therein lies the point. I've had this discussion with people who are novice investors as far as their knowledge of what they're doing many, many times. When we start talking about major companies that they've heard of that are in the news or whatever, SpaceX is just the latest version of that. But should we be buying that? Is that important that we have that in our portfolio? You already do. You already have that. And they say, what do you mean we already have that? And we have software that we use that'll actually analyze their portfolio and break down all the ETFs, mutual funds, whatever it is they already own, and say, let me show you what's inside of that. Let me show you how much you own. As it turns out, they already own thousands of dollars worth of that particular stock. They weren't even aware of it. And that's kind of the point. And you're also putting the onus of doing all the research and how much of each one of these should I hold in my portfolio. You're putting that on money managers whose job it is to do this. It's what they do all day long. They're more likely to make good decisions on how much of it they should buy.
I think the greatest thing to remember, and what I'm seeing a lot with this SpaceX IPO, is FOMO.
Oh,
right?
Absolutely.
It's more fear of missing out. It's more fear of missing the boat. Because here's the reality. It's another stock.
Yes, exactly.
Will it be a good stock? Maybe, probably. I'm guessing. If I have not purchased it yet. I probably will at some point, but I'll probably wait for a price fluctuation to go maybe find a more investment or more better entry point to invest my money. But I wasn't going to do it today when it's up 20-25% already, right? And if it never comes back down, big deal. But I do know for a fact that some of the more aggressive ETFs that I own are going to be investing in it. So I will own it by default in some of the funds that I already have within my portfolio, whether I want it or not. It's going to be there, right? But I think this leads to a much greater discussion of just because you want something and something seems attractive, is it really right for you? Is it the most prudent thing to do? And once again, going back to how we kind of started this conversation, when we're getting calls from our 80, 83-year-old clients saying that I want to get in on the SpaceX IPO, for what purpose? Because
you stole this thought right out of my head.
For what is your purpose for trying to get in on the SpaceX IPO? Is it because you're watching cable news all day long at home and this is what they're talking about?
Right.
And you want to be a part of that because you think it's going to change your world? At the end of the day, there's plenty of other stocks. I mean, we can do an episode on what semiconductor stocks have been doing year to date and the performance of semiconductor stocks. My goodness. I mean, geez, if you were invested in any kind of a semiconductor ETF, you have made a lot of money this year. Okay. I'm not talking about SpaceX. There's always stocks. There's always a better stock. Okay. Yeah. There's always a better stock than the one that you're invested in. There's always a better portfolio than the one that you're invested in. What we have to focus on and what we've had to remind a lot of these clients that we've talked to that have called in is, how does this benefit your portfolio? How does this work within the confines of your financial plan? And is it worth it? Is it prudent? Does it help you in your goals and you achieving your goals?
Keyword there.
Right? Does it help you achieve your goals any faster by investing in the SpaceX IPO or in any IPO for that matter, or in any individual stock?
I was thinking almost identically what you were. I'll phrase it slightly differently. The goal is not to own this cool company. Yeah, if you do, that's fine. And just like people are really, really interested, it's very important to me that I get this rate of return. It's very important to me that I have this X dollar amount when I retire. All of that is irrelevant. What is the goal? The goal is to have enough money to buy what you want to buy, to live the life that you want to live, right? Who cares what the rate of return on a particular stock was, or whether you own this particular really cool company? What ultimately matters is, do you have the financial ability to live the life that you want to live? That's the reason we always lead with new clients with goals, not with, I spoke to a gentleman on the phone last week, first words out of his mouth, what rate of return can I expect to get if I work with you? Impossible question to answer because you're unique, right? You have different goals than somebody else.
Not to mention, we don't have a crystal ball.
Correct.
I have no idea what the market's going to do over the next year.
We are not going to build you out identically to everybody else. You are unique, right? So you can't be treated exactly like everybody else and have the exact same portfolio. It just doesn't work. At the end of the day, as you say, what you're looking for is this a tool that helps you accomplish your goal, right? It's the goal that matters. When you go into your toolbox, do you care what brand your hammer is? No, you care that the hammer works when you're trying to knock in a nail.
Yeah.
Right? And that is actually ultimately to build something. So think about that end result, and that kind of helps you make these decisions instead of chasing the fear of missing out because I didn't buy. You know what? I didn't buy Amazon when it first came out either. To this day, I do not own any Amazon as individual stocks. I'm okay. Right? It's a cool company. I certainly give them a lot of my money, but I'm okay even though I don't own that cool stock.
And going back to the romanticism of the idea of investing in an IPO and investing in any stock and holding it until it's worth whatever multiple down the road, going back to the idea of Amazon specifically, Amazon had so many 50, 90% drawdowns. What that means is a 50% drop in the stock price. The chances that you would have held Amazon through all of those different drawdowns is just minuscule. Okay, the people that actually held Amazon during all of those drawdowns is really, really small.
Oh, yeah.
I mean, you're talking about probably the owners of the company that maybe had limitations on whether or not they could even sell. This goes back, you were talking about the secretary.
Yeah.
The secretary that had, Amazon or whatever company that you want to use in their 401k. Well, they probably had it because they couldn't sell it.
Yeah.
Okay? They probably had limitations. It was probably in their ESOP. It was probably in their employee stock ownership, or purchase plan, whatever kind of plan that they had, and they probably could not sell it. And it was probably gifted to them as part of their compensation package, and they probably had very strict limitations on whether they could sell it or not.
Right.
So because they could not sell it during some of those massive drawdowns, when maybe they probably would have if the opportunity presented itself. There's an old joke. There's a joke within our industry that Fidelity did a study.
Okay.
And the best performers, the best individual retail investors were the ones that were dead.
Ah, yeah.
Because
they stopped trading.
They stopped trading, right? They weren't trading. And basically the idea is they were buy and hold investors. They let the market do what it's going to do. They weren't trying to time the market, right? And those were the ones that had the best performance in their portfolios because they were dead and they weren't trying to trade. Same logic applies here, right? Everyone talks about, the secretary that, retired from Amazon or Apple and was part of the IPO at Facebook, and they had the right job at the right time, and they had all these, stock incentives. Well, they had the stock incentives, but they couldn't sell the stock incentives, right? It was part of their compensation package, and they happened to get out at the right time, okay? So what all of these stories that romanticize IPOs and individual stocks, what they all assume is human psychology and human behavior.
Right.
And the reality is, what do most people do at the bottom of a market? What do most people want to do at the bottom of a market?
They want to get out. They want to sell.
Which is
exactly what you shouldn't do.
Which is the worst thing you can usually do at the bottom of a market, right?
Exactly.
But human psychology, and we've seen this time and time again, we still have clients that walk in the door that sold all kinds of stuff at the end, at the bottom of 2008, 2009.
Yep.
And the amount of money that they could have had if they had stayed put, right? But they moved to cash, and they got back in when the water started feeling a little bit warmer again, right? When you eliminate that temptation, that psychology, that human behavior is eliminated from all of these romantic stories of all of these stocks that performed, X number of multiples and did so well over the decades, right? But the reality is most people probably wouldn't have held on to those individual stocks because at some point or another, most of those stocks were dogs.
Right. I'll kind of put a bow on this a little bit. We both work with multiple clients that are worth multiple millions of dollars. I can't think of a single one that I work with that made that kind of money because they timed the market right. No, they didn't buy the sexy IPO, not IMO. They didn't do all that stuff. What they did was they consistently saved, and then they did that buy and hold strategy. They held on to it for long periods of time, or they bought good mutual funds or ETFs over the years and allowed those managers to actually take care of everything for them. And now they don't own anything super incredibly sexy, but they're living the life that they want to because they didn't try to time the game. They didn't try to outthink it. They were just consistent savers.
Yeah, I mean, we talk about this a lot with not letting the news dictate your behavior, right? Don't let the news influence your decisions too terribly much, and that's what's happening right now because this SpaceX IPO is all over the news. It's cool, right? It's a very cool company. For however controversial he is, Elon Musk is he's a one-of-one CEO.
Oh my gosh, yes.
Okay, he has done just an absolutely phenomenal job in just generating wealth for the people that work with him and the people that he works for and the companies that he runs. He's done an absolutely phenomenal job. There's all kinds of reasons probably why. He probably has a couple screws loose. I know he's somewhere on the spectrum. Ooh. He's got a work ethic unlike anybody.
Unlike anybody, yeah.
It to the point that it's obsessive, right? And that's kind of admirable, but it's kind of not, right? Yeah. But at the end of the day, yes, it's kind of a really cool thing that he's been able to do for the shareholders of any companies that he's been involved with. And I think that's why people are so interested in the SpaceX IPO. Yeah. I am too. I'm really interested to see how this does.
Like I said, I bought a little bit. I'm not going to buy a lot, right?
But
because I own the ETFs that are also going to go out and buy it. I'm going to have plenty of exposure to this without doing anything else.
But I'm not going to change my investment philosophy because Elon Musk has a new company that's now publicly traded. Yeah. And I can't dictate the failure or success of my retirement plan or any of our clients' retirement plans, to be very, very specific. I can't dictate the success or failure of those plans based upon one company going public. Yeah. And you shouldn't. And you shouldn't do it for any company, right? It's called diversification of risk, and it's a tale as old as time, and it's super boring and it's super vanilla, but you know what? It works.
I did the example last night. I was working with my son, and he's getting ready to start a finance degree. And we were talking about the concept of that rate of return getting those big, sexy returns, which typically also come along with horrific downturns, right? Versus just getting a not super cool rate of return, but getting it consistently. And I had him do an example. You and I have done it many times, where if you average out the rate of return, they both get to 10%. He was like, wow, I didn't see that coming. I said, so which one do you want? He said, I still want the cooler one. I said, okay, now apply money to it. And I had him do the same math where he ran $100,000 through it. And the one that wasn't sexy had a lot more money. And I said, isn't that the goal, is to have more money, which means you could spend it on more things? And he went, yep. Now I see the point. It's not about chasing the latest brass ring, right? It's about being consistent and doing what's right. So, all right, I think we have beat this horse to death. So I want to hear what you think about our bourbon.
This is one of the smoothest 130 bourbons.
Uh-huh.
I mean,
until I put water in it. I put a drop in it and went, whoa, that changed a little bit. So I put a second drop in it. Quite frankly, I'm not going to say it ruined it, but it's not nearly as good now as it was when I started. The first little taste, because we hadn't had anything else, you start at 128 point whatever proof this is. That's a wake-up call, right? But once my palate said, okay, now I know what to expect, oh my gosh. It's a butterscotch bomb. That's what it tasted like to me. But I lost that when I put a couple of drops of water in it. I lost that butterscotch, and now it's more spicy flavor.
It's funny you say that, because I was just sitting there thinking it was a little more spicy. I felt it a little more in my sinuses when I put a drop of water in. Beforehand, it's interesting because we did one recently where I was talking about it was all in the mouth, but nothing down in the
pipe. Chest. Yeah.
This is the exact opposite. And it's actually smooth, but there's not a ton of. There's a lot of flavor, but it's not overwhelming, right? It's not overwhelming the palate. It's smooth in the palate, right? And then you feel it a little bit more as it goes down.
That spicy note, and when I say spicy, I don't mean hot. I mean flavor spicy.
Yeah.
There's a lot more of it now with a couple of drops of water in it than there was when we started. Now, that is probably because of the rye content. So this is Buffalo Trace's Mash Bill 2, which is the one that has the higher rye. It's not what we would call a high rye. But it's a higher rye than the Mash Bill 1, which is the Eagle Rares and the Buffalo Traces of the world. So I think what happened there was when you put a drop or two of water in it, it really made those those spice notes come out. And we talked once before about how putting a drop of water in it can actually intensify. You think it's just diluting it, but it's not.
Yeah, right? I feel it's on my palate a lot more after I put a drop of water in.
Yes, absolutely.
Yeah, then very good for 130. I mean, delicious.
Stuff's wonderful. I would tell you, don't put water in it.
You don't need to.
Don't put it. Yeah, just drink
it's not. It's not bad.
No.
I'm not gonna say it's bad. I mean, you can if you want, I guess, but it's not. I wouldn't say it's better.
One thing that I will say that I like to do when I have something that is a very high proof like this at home, I'm sorry, not high proof, high rye. That's where I was going with this. When it's a very high rye content and you get that really spicy note, something that I like to do with that is drink it cold, not put ice in it, because the ice is going to water it down. That's not what I'm trying to do. This is where some people will, they'll put in
like whiskey
what
stones.
they call whiskey stones, exactly, or rocks.
Yeah, I've got some.
I've tried those. It's not my thing. They work.
I don't.
You know what works well for me is take the bottle and put it in the freezer for about 15 minutes.
That works a lot better than whiskey stones.
Exactly.
I've got whiskey stones. They don't work that great.
No, I'm not a fan. I've tried them. But if you just get it cold enough, that temperature difference kind of controls that spicy note. And I personally tend to like that a lot better. So something you can try at home. We don't really have that ability here in the office to get all of our whiskeys to the correct temperature. This is not a wine storage facility, right? We don't have that. Yeah. So that's just another way that I would suggest trying it.
So, but yeah, delicious. Nice pick. Good pick. I'll take it. Well, I'm already gone. I'm not pouring another one.
Yeah, that's the other issue. When I did put a couple drops of water, I went, ooh, I shouldn't have done that. Well, one way to fix that is to put more whiskey in there. At 128 proof, that is not a great idea.
We are still at the office.
Right.
And, so I think I will call it the day after that. But it was very good. Yeah. So with that being said, probably a good place to wrap up. Interesting conversation today. I think, once again, we're not usually quite this topical.
Right.
But I think with all the interest in the SpaceX IPO, and we probably, warranted a little bit of a discussion on IPOs in general and what they mean and how they work and how they come to market and whether they're even appropriate for most clients, which for most clients, they're probably not. So
agreed.
So I'll have to say, thanks for joining us. Thanks for listening. If anything that we said today, happened to hit home with you, or it might be something that would be of interest to anybody that we would greatly appreciate if you shared any of our content with any of your friends, family, associates, or even strangers, right? Thanks for listening. Thanks for watching. Until next time.